Right, my name is Stephen Frazer, and I am the online editor and technology writer at Shares Magazine. I'm going to talk to you briefly about where we sit in the technology space. Times are a-changing, and nowhere does change come faster than in the technology space. Just a reminder, I'd just like to highlight some of the bigger themes that I believe are dominating and creating opportunities for companies and for private investors. Mobile devices, well, we're all familiar with smartphones these days. It could be something as simple as keeping deliveries, alerts in real time, that kind of stuff. It could be something a bit more valuable. A local community nurse, for example, staying in touch with the GP practice, staying in touch with the patient client. Big data and analytics. You may have heard these terms mentioned before. At the moment, it's quite difficult to get your head around the kind of size and numbers we're talking about. But what we're talking about with big data is vast, vast volumes that a normal infrastructure, IT infrastructure, simply cannot cope with. And the idea is we collect all of this data in and we learn something from it. We analyse that data. Hopefully, we can learn lessons about the past and lessons about the future. Cybersecurity, one of my pet topics. I do like to bang on about cybersecurity. If you think about all of the different types of technology trends that are going on across the world, it's the kind of thing that sits beneath all of them. You would have been aware of all the national press reporting, hacking attacks and so on. Many of these are very organised criminal gangs, but it might be hacktivists, campaigners who want to gain political capital rather than financial gain. If we're going to stay on top of our technology development, if we're going to use it for our benefit, we need to make sure we're safe. Our personal details are safe. Our money in the bank is safe. Digital payments. You may be aware that Apple Pay came to the UK quite recently. It's got a few headlines. I wrote something about it myself. It's not by any means the first digital payment system in the UK. There are many of them. It works a bit like your Oyster card if you're familiar with the London Transport Network. You put a fixed amount of money, I think it's £20 or £30 on Apple Pay, and you can use that without having to punch in PIN numbers and so on. Increasingly, we're seeing contactless payments come into the normal day, everyday life. You go to lots of retailers these days, and you can pay with just you touch your debit card rather than punching PIN numbers and so on. Increasingly, we need to focus on the networks that connect our banks, mobile network operators, and retailers or vendors of any goods and services. Make sure that whole network is safely secure so we have confidence that we can use it. And lastly, fintech. Now, this is a bit of a buzzword around, has been for maybe 2 years or so, maybe perhaps even more than that. It's something that the UK is actually very, very good at. Financial technology. It's an area that our guest company today, EG Solutions, might well claim to be part of. So where are we now? Well, the red line at the top is the Techmark index of the London Stock Exchange, which is effectively most of the technology companies on the LSE board that are wrapped up to form an index so we can gauge roughly how that market is doing. You'll see the black line underneath is the FTSE All-Share Index, which you're probably familiar with, is pretty much the average of how the UK market is doing overall. And you'll see it's outperformed for the last year and increasingly outperforming the All-Share Index. To really establish, though, what this means and put it into a context, we also have to look back and see where we've come from. You may remember 1999, 2000, dot-com boom, may even been unfortunate enough to lose some money. It can seem like the UK tech market and technology shares in general are very highly valued. There are certainly some big American companies, for example, trading on quite mind-blowing multiples, and a handful even here in the UK. But when we consider where the tech market has come from lows of 2000 and how it's outperformed, it's quite staggering. The last 5 years, that is an amazing outperformance. And part of the reason for this is an appetite for investors to get involved again. People like yourselves, but also professionals, fund managers, etc., investment companies, banks, they want to get involved in the technology space because there is genuine growth available. Growth is harder to come by than you might expect. And in many mature industries, it just simply isn't there. In the technology space, we certainly have growth. Over those 20 years or so, we've seen massive change. I pulled up a couple of slides just to kind of remind ourselves of where we've come from when we're talking now about MPEGs and streaming video servers and so on. It kind of makes the old Betamax versus VHS debate, well, it's obsolete, isn't it? It's just an irrelevance now. It seemed so very important at the time, though, didn't it? Much the same way, everyone's got a memory stick now, about as big as my thumb. Enormous amounts of data capture on that tiny little stick, where we used to have to plug in these fairly stupid discs and carry them around with us and get them lost and so on. And who remembers Windows 95? I mean, we've all got Windows, right? Everyone has Windows. That's what it looked like. Can you imagine using that these days? I'm not even sure what it means. One of the most interesting areas I find about the UK market is that appetite for growth. What fuels much of that growth is new companies coming to the market. And I'm really pleased and quite proud in many ways to see a company like Sophos come to the UK market. It was floated just earlier this year, and according to one analyst I've spoken with, it's the biggest technology float in the UK ever. Just over £1 billion. It went straight into the FTSE 250 mid-cap index. It's got a fantastic reputation, a great track record for growth. What does it do? IT security, funnily enough. It also has a neat little sideline. Sophos socks. Get your Sophos bottled water. Your Sophos office doodads. I quite like that. It lends a bit of humanity to the company. Going back to the payment space, so you mentioned about Apple Pay. We're now on the verge of seeing Google Pay come to the market. Obviously, where Apple goes, Google will seem to follow, and vice versa. Freeing us up from carrying around cash. Many people resist the temptation these days to carry cash around with them, partly for safety, partly for convenience, lots of different reasons. The idea that you can now have in your own mobile phone a payments delivery device is really quite handy. Going back to fintech, I mentioned before that this is something that we in Britain are really quite good at. I'd like to put that into a bit of context. These numbers were produced by Ernst & Young, and it suggests that the UK fintech industry, and this is beyond quoted companies, is worth £20 billion a year. The UK fintech investment in 2014 was £342 million, or higher. They couldn't quite establish a firm number. And people like you, private investors, are getting involved yourselves. £1 billion of estimated startup funding for fintech companies. Now that is a real show of support, and it's also borne out by previous successes. If it's disaster after disaster after disaster, Who's going to get involved? We've seen lots and lots of successes. People like to see success. It makes them confident that the next company coming along will also be a success. Always remember though, past performance, all that jazz. And here we put this into a bit of context. One of the biggest UK quoted genuine fintech companies is a company called Fidessa. They have for many, many years provided the trading platforms for, for equities to many of the stockbrokers and investment banks around the world. Their share price is the green line versus the all-share index, which is the black line at the bottom. So you see the company has done better than the market, but gradually less better. One of the problems it's faced is it's struggling to find that genuine growth. It, for many years, had grown into double digits in revenue terms, and it just is not seeing that kind of growth anymore. One of the problems it faces is consolidation in its market. What we saw when the market fell apart in 2008, 2009, 2010 is many, many investment banks either going to the wall or being taken out by other investment banks. Now, when you're a company like Fidessa, you have A, B, and C, all clients. Well, if they all join up and become a single entity and potentially owned by a company that doesn't want Fidessa software, they lose customers. You also reduce the number of potential customers that they can sell to. They try to address these issues by expanding into the derivatives space, so things like ETFs that you'll see around the show today, and options and futures and warrants and etc. But fundamentally, they are really struggling for growth. As opposed to the company at the top, Earthport. Earthport are a payments network that allow international payments. So how to take your money from the UK and send it to Nigeria, or get your money from Hong Kong and send it to the US. They typically look at a £100 million payment ceiling. That's roughly, and below that. It's relatively small payments, but this is a niche that is allowing them to grow very, very rapidly, and that has been reflected in their share price. But we have to also take a long run view. A fund manager I spoke to recently, based out in Silicon Valley, to him, it's looking for long-term growth stories that can keep on growing. It's not about this minute's hot stock. It's about long-term growth trends. One of his favourite companies was Facebook. You see just how vast that company has become, and the increasing ways it can monetize its user base will drive revenues, drive profits for maybe decades to come, who's to say. Another company he's very fond of is this company, GoPro. You may not be aware of them, but if you've been skiing any time recently, or perhaps you've been skydiving or whatever you like to do, you may have seen some of these cameras fitted on helmets and so on. They have a whole range. It's really meant for the active leisure pursuit. And another company, Tesla. Now, you may have heard or read stories about Tesla. This is the electronic car company based in the US. One of the big problems with electronic cars, you may be aware, is what's called range anxiety. Who wants to drive up to Lincoln when you're going to run out of juice at Peterborough? The idea is we increase our battery technology and increase our infrastructure. So everywhere there's a petrol station, we can have an electronic charge port. Of course, the big issue at the moment is charging takes hours. Tesla's one of the companies does more than just focus on the car. It's focusing also on battery technology, and that's battery technology that they can sell outside of the automotive industry, perhaps into energy storage markets on a more general term. But as Walter Price, the fund manager I spoke with, flagged to me, the economics of the electronic car are only one side of the story. What also makes it a very compelling sales proposition for its buyers are the interior design. You'll see yourself, it's fairly eye-catching. A 17-inch all-digital flat screen touchscreen control panel controls almost everything the car does. But as another fund manager recently told me, always focus on cash. We can all get carried away with those story stocks. A brilliant CEO can stand up and tell you a lovely story about what's going to happen in 3, 5, 10 years' time. But fundamentally, while it's not making money, someone has to pay. And that often is private investors. If that story goes pear-shaped, doesn't happen in the way it's supposed to happen, that leaves all of us out of pocket. Keep coming back to the market, looking for funding, that's pretty much a one-way ticket to a downward curving share price. So bear in mind, cash is always king. If not cash today, certainly cash tomorrow.